Hi, and welcome again to another edition of Market Analysis for today, March 7th, 2024. I'm Giovanni Betancourt, analyst, trader, and educator with Vantage Markets. All right, so Jerome Powell didn't say much we didn't already know. The Federal Reserve Chairman told Congress yesterday that he's in no rush to start cutting interest rates, though he expected to happen sometime this year. He certainly didn't sound any more concrete about the timing of those cuts than he did in December. Back then, the market thought the reductions would start in March. Now that March has arrived, traders are thinking it looks more like June. Powell isn't making any promises. He wants more evidence that inflation is under control and will be cautious before starting to reverse the most aggressive campaign of interest rate increases in a generation. Investors hoping for rate cuts to give an extra boost to stocks will be left with a few questions. First, is there anything that could force the Fed's hand, for example, a regional banking crisis? Well, New York Community Bank Corp troubles continue, but the latest cash injection of $1 billion plus may prevent it from getting any worse. So the answer to this one seems like a no. Second, will the presidential election have an impact on the Fed or markets? President Joe Biden gives the State of the Union address today, taking the contest up a notch. But the evidence suggests that it won't have much of an impact. Finally, can the market keep going up even if these anticipated Fed cuts never come? It might. The economy's strength is providing good support for earnings. Productivity gains are helping as well. Despite the Fed's reluctance to make money cheaper, assets such as gold and Bitcoin are still touching record highs. For now, there's not much investors can do but keep calm and carry on trading. So with that being said, let's take a look at what's happening in the markets today in the NASDAQ. So yesterday we saw that fluctuation. We were looking at the recovery or pullback, a correction from those previous two first days of the week, and we were saying that perhaps the fluctuation might take the market towards the 18,200 psychological round number, and we kind of almost got there. All right. So today the momentum continues to steadily to be the same. We are still within Tuesday's trading range. So the momentum, as the momentum picks up, as the market opens, perhaps today will be the day that we are going to surpass that psychological resistance level and then just revisit that high from Tuesday, or perhaps come up to our resistance that it has created a double top. RSI is further away from entering our bot territory, so we still have the probabilities. Then the S&P 500 having the same fluctuation, but inching closer to the opening of the trade or the range on Tuesday. So most likely, let's see if that momentum spills over at the open. 5140 is more likely to be met, but our resistance is at the top of 5156. Let's be bullish and go with it. The Dow Jones. Okay, so the Dow still having the same kind of fluctuation as the other two. They have a deeper pullback on Tuesday. So the moving average is above the market. So that will be our first point of resistance, a dynamic resistance being the moving average. 38,900 could be the second one, which is basically yesterday's high. RSI is further away from being overbought. So hey, there's plenty of room to move. Crude oil. So crude oil, I had 80.50 yesterday as my resistance. We kind of looked across it. We came, violated, picked above it, but quickly retreated. It retraced and closed below it, below $79. Today, we opened with a small gap up. It has been closed. Market did fluctuate to the downside. It kind of fluctuated and traded below our moving average, but it's quickly recovering. Let's see if we have more participation from the market. And again, coming back up and meeting that resistance of 80.50, being bullish. Okay, Nat Gas. Nat Gas this is one of those classical setups that we're gonna have looking for a breakout. That breakout I'm saying, okay, so if the market was trading lower, pushing lower, and found that bottom, and from here it has rebounded, and is there's a force, the tug of war, not allowing to move higher and not allowing to trade lower. So can we just stay here throughout the day or throughout the week and just in this very tight range of, let's say, $2 and $1.80, or even less than that, $1.90? We could say $1.90 and $1.98, $2. So 10 cents range, or that could happen also, or we could have obviously that breakout to the upside so far. So let's see what happened. Okay, so gold 2160, baby, 2160, that has been met. I have my resistance 2180. Gold making higher highs, lower highs. That is definitely an uptrend. So let's just go with the momentum. And now we are completely overbought. How long can we stay here? Will gold happen to crash and just tumble? Well, with all these things going around, all these scenarios in the Middle East, and dollar index also looking to be receiving more bidding today. Most likely, if that continues, we probably will see 2180. So I'm going with 2180. All right, then silver, also same token, 24.5. RSI is not as overbought. It's not even in the overbought territory. So we can contemplate 2450. Then we have, look at copper. Nice parabolic movement to, so look at this nice, just sideways movement, couple of congestion and that breakout. Yesterday we picked above it, closed below it, and today we opened up with a very small gap up, and copper just shot up straight up. RSI is getting closer to even overbought, so 392 can be met. Then we have Bitcoin. Bitcoin is just sitting here idling right above 66,000. 70,000 is my target. Let's be bullish. And the currencies. Okay, so euro opened with a strong gap down today. It has been closed. Now, would that momentum continue to the downside? Let's see. If the dollar index continues to get plummet, I don't see it, but we could probably just also stay around here and just idle sideways, pivoting. The pound also looking to come up to 127.80, and the dollar index has done some recovery. Let's see if that recovery will last, or will it just be one of those, because it did open with a gap down. It has been closed, so the momentum to the downside is favored. So if that does happen, if you see the dollar index just trading down towards the 103 and perhaps to the low of this candle created on the 2nd of February, which is 102.70, we'll see gold 2180, silver above 24.5, and copper almost 398. So let's see, obviously in the currency as well. So keep that in mind. Have a nice trading day, and I will see you tomorrow.